Hello everyone, welcome back. It's been quite a long that I recorded a video, so I thought that I should record a video. And also, I think that after creating the Discord group, I feel like I kind of now know better that what are the troubling areas for you, because people are sharing charts there, and I can see that most of them uh, are doing the same mistake. And the reason is obvious, that we are in a downtrend. So maybe you are not getting the right picture of the market. When the market is in an uptrend, you will definitely get a picture that the direction is upward. So you will clearly count 5 minute wave and short it or long it if it of course breaks the highs. But unfortunately, when market is in downtrend, you cannot easily understand that what is going on actually. So you try to calculate 5 value wave all the time, and when it breaks the top, you try to understand it in a way that the next impulse has started. But actually that's not the case. It's not an impulse, because the market is in a downward direction. So there are a lot of examples on almost every chart, on every time frame, that we are not creating 5 valid waves most of the times. And even when we are creating 5 valid waves and it breaks the highs again, it's not the next impulse, it's actually the third wave, and then the market drops. And this is happening all the time. So that's why, especially in last 2 months almost, when BTC is going sideways, the market is very strange. I mean, randomly you will see that a coin will take a pump, and without creating 5 valid waves, even creating 3 waves, it will go down, and you will have no clue that what has happened. And the reason is that the impulse is happening in a downward direction. You are getting 5 waves in a downward direction, and you are getting 3 waves in an upward direction. So there are, like I said, the examples are on every chart, but right now I in front of me is sand chart. So if you see here closely, almost everywhere we are getting 3 waves up and 5 waves down. So we have 5 waves down structure, 3 waves up, 5 waves down structure, 3 waves up, right? So you are getting 3 waves up and 5 waves down. And the reason is, on a small and a large time frame, that is what is happening. The impulse is always going down, and then you are getting a very weak or a 3 waves move to the upside. And the reason is that this thing happens same in bull as well as bear market, because you will get 5 impulses, 5 waves impulse. Let's see this in a bull market, and you will see a 3 waves down, right? Inside those 3 waves there can be different structures, but to keep it simple, you will see 3 waves down, and then again you will see 5 waves up, right? This is bull market scenario. On the other hand, if we talk about bear market that we are in right now, we are getting 5 waves down, and we are getting 3 waves up, because the overall direction is down. So we are getting 3 waves up, then we are getting again 5 waves down, then again 3 waves up. So that is what is happening all the time in almost every chart. You are getting 5 waves impulse down, 3 waves up, then you are getting 5 waves down, 3 waves up, 5 waves. So that is what is happening. Same like what happened in bull market here. We had 5 waves up, 3 waves down, 5 waves up, 3 waves down. So right now we are in an opposite direction. The market is downtrending. That's why we are not mostly getting 5 waves impulse. And even if you get 5 waves impulse, it's most probably the C. It's not the next wave. That's why you don't get the next fifth wave or the final wave, because these 5 waves happen in mostly C, or these 5 waves happen in A, right? So these are the areas where you are getting 5 waves impulse. But when you get 1, 2, 3, 4 and you don't see 5, the reason is that it's a 3 wave structure. It's not a 5 wave structure, because overall 5 waves, 1, 2, 3, 4, 5 is in a downward trend. So the market is downtrending. That's why we are not getting that 5 waves impulse on a bigger time frame. That's why we are trading the lower time frame structures. And in last 2 months even, I have not traded a lot. There are very few trades that I have taken. The reason being that market is choppy, it's sideways, and we are accumulating there. Now let me show you something about Bitcoin, and then I will discuss about some corrective patterns today, because those corrective patterns are not that important to understand. But like if you see here, I sometimes I don't trade it, but sometimes to understand the market, or to see that what can be the next move, I do this. But this is not what I trade. I have not traded this area a single time for BTC, for example. Even if it was the any other coin, I would not have traded this, right? So because we are not trading it, we should not complicate it. You don't have to be a PhD in Elite Wave to take trades. Right now the market is tough because of this, because BTC is doing this. That's why you don't see anything or any structure or any coin, because BTC is ultimately that defines the market. So if BTC is undecisive, you cannot be in a long-term trade on any coin including BTC. But this is daily. Let's go to daily chart. So bear markets are sometimes, in fact, all the times very boring, and they test your patience. I want to show you something, right? Right now, fortunately, we are going down very quickly, but when this thing starts to happen, these slow movements, that means that the volume has gone, and uh, it will take time. So if you see BTC USD chart that we are watching on bits amp or bits amp, and you look at this area, so let's go to even weekly chart to make it more easy for you. So those people who have, you know, who are feeling bored in this market, let me show you this area of Bitcoin, right? So this was I think the second bear, the mini bear market, you can say, because this was wave 3 and 4, and then we created the next. So if we see here, and you see this area of Bitcoin, you see these tiny candles, these small candles. This is weekly chart, remember. So if we measure this area, from this you can call to this area, it's 130, almost 130 days, and 130 days means that it's approximately 4.5 months. But if you watch it closely, even in this area, nothing was happening a lot, because this was all bear market. And if we calculate this bear market duration, let's say that this was much volatile, because initially the move is volatile, so you see movement. But from here BTC started to die, right? So this was all dead movement. And if we measure this now overall, before we started to see this volatility that came in, this is almost 371. This is a year. That's almost a year that BTC spent here without doing anything. So right now we are here, and if we measure this area, it's been almost 190 days, right? And 190 days is again almost 6 months, right? So it's happening the way it happened before. Always bear markets try to tend to be very boring, very exhausting. So if we talk about this bear market, even that's 250 days. That's again more than, or approximately 8 months if I am correct, right? So this is bear market, but when bull markets will come, this is what you will see. And this happens all the time, right? So you see here this boring area. Now this is what is what I was looking at last time. Just look at this first bear market of BTC. It's 890 roughly I'm calculating roughly. It's 2 years bear market approximately. But when we got out of bear market, we saw this, right? So this is bull market. But bear markets tend to go sideways, very choppy, nothing much happens, the volume almost dies. Just look at these candles. Look at these candles. So what guarantees us that this has happened before, it will not happen this time, right? So we can't say anything that this sideways movement, how long it is going to take before we start creating the next highs. So we need to be patient here. Just imagine what would have happened here, that these 2 years of sideways movement, almost no volume, the BTC candles are almost next to nothing. And what would have been happening there in alts or with altcoin? Nothing. So market was dead. And of course these are the areas when people start to lose their interest and they say crypto is nothing, and then suddenly you will start seeing this. But look at this, that when you will start getting the volatility, how much time you will have, right? So this is even years of bull market, or if not a year, maybe a couple of years. But look at this, market will never stop. So that's what I'm saying, is that these times are the times when we need to understand that this happens. We don't have to get bored, we don't have to lose money. We need to understand that we just need to trade a setup that we get maybe once in a couple of weeks or once in a week these days, because the market is now dead. It's the volume is gone, and we are not even this is more volatile than this area. That's what I think, that what would have happened here when there was nothing to trade. So we need to be patient here, right? So that's what we need to see. We will have a lot of time. See, whenever the break of structure will happen on a bigger time frame. Let's talk about this. Even let's talk about this, right? So this is where the volatility came. So if we talk about this, see how much time we have. So this is all bull market, just pumps. So if you get one bull market, that's enough, and in next bear market you will really take trades, and even then you will make money. So we are waiting for that. That's we should get some break of structure, right? At some level. So even if it goes down, maybe to 10,000 to 12,000 areas, and then we see some structural break. Even after that, we will have a lot of time, because next bull market is going to be huge, right? So we'll have a lot of time to trade. So don't get bored, don't get distressed, or I would say don't lose interest here, but try to just understand that we are in sort of market that those are hard to trade and not recommended to invest, because this has no direction. Even in investment, I would have preferred this area when we know that the structural break has happened, right? Even after that, you have huge area to catch. So for investment point of view, even we don't have any direction. So we don't have to catch the bottom, let it break one top, right? So these will be the areas where I would say that this is good time to invest, right? So this is something that I wanted to share with you. Secondly, talking about the corrective patterns, because this is something that I feel like you are getting trouble. And something that I want to tell you again is that we need to see 5 waves impulse. That of course we are not getting mostly, because we are seeing most of the time the 3 wave structures. So lower time frames are tradable, but higher time frames are 3 wave structures. So you get a 5 wave impulse like this, and then you get another correction down, and then you get a 5, and then it starts dropping. So overall it's not a 5 wave structure, it's a 3 wave structure. And the reason is that it's not an impulse. We are getting 3 wave structures most of the time, right? So we are getting ABC, not 1 2 3 4 5. That's the reason that you are getting these type of 3 wave structures, right? So that is something we need to understand. Secondly, what I was saying is that if we want to trade, we need to get what we are looking for, right? Corrective patterns are not tradable. You cannot trade the corrective patterns. So we need to have that what we are looking for. And what is that? A 5 waves impulse. If you are not getting this, you cannot trade it, right? How you will trade? First, you need to see that it's an impulse, 5 waves. Secondly, if you want to long it, you want to see a correction, and then you will get the next impulse, right? So we will not now trade or we will not stay in the market, because we know that right now we won't see the 5th, right? So there is no 1 2 3 4 5 happening for years now, and the reason is this 5th is not happening. The reason is that it's ABC structure to the upside, and I explained this in the start, right? So even if you want to long something, you are a resistance support trader, that's something else, but we are trading elite wave. So if you even want to long something, you need to have this 5 wave structure first, so that you are sure that yes, this was a 5 waves impulse to the upside, and after that you will catch a long scalp here for this area, or you need to see a 5 waves impulse to the upside and you want to catch this area or a part of this area, right? That's how we trade. And this is not happening for last 2 months almost. Randomly I see a couple of coins have done, but mostly it's just pump and dump, right? So let's talk about the corrective patterns. I explained you a couple of corrective patterns, and I said those are enough. So one I said is the simple zigzag, that we call as the simple ABC structure. So A will contain 5, B will contain 3, and C will contain 5, and these structures are mostly very easy to spot because these will be very clear. You will see clear 5 valute waves in wave A, you will see clear 3 waves in wave B, and you will see clear 5 waves in wave C, right? So these are one of those patterns that are simple and that are easy to spot. We call them the zigzag, right? Other than that, what we explained or what we saw was a corrective pattern that we call as flat, and in flat we have 3 variations, right? So you have 1 2 3 4 5. Now we have a regular flat. What a regular flat is that A will come down, B will go or cover most part of A, so maybe it will go approximately where A is, but it will not cross the start of A. Okay, so it will be somewhere here. I would say it will cover 80 to 90% of A, or maybe 100%, but remember it will not cross the start of A. So B will be here, and C, it will be approximately where A is, slightly below, slightly above, something like this, but it won't go far, right? So this is something that we call as regular flat. So zigzag is this, right? So let me just delete the subwaves. Zigzag is this 5-3-5 pattern. A is 3-3-5 pattern, right? So you will have 3 in A, 3 in B, and 5 in C. So keep this in mind. So we're talking about flat. So this is one. Second, we call as expanded flat. That is most common most of the time. So 1 2 3 4 5, and expanded flat is 3 for A, 3 for B, 5 for C. So this is expanded flat. When A will come below, B will go beyond the start of A, and C will be beyond the start of beyond the end of A, right? So this is start of A, this is end of A. And how it will look like, we will have 3 in A, so 3 in A, 3 in B, and 5 in C, right? Similarly, this that we talked earlier, 3 in A, 3 in B, and 5 in C, right? So let me just name them also so that you are clear. So this one we talked about is a zigzag, right? Simple zigzag. Then this one is our regular flat, or simply you call it flat. And this one is your expanded flat. And one more variation in flat, that is called running flat. So you have 1 2 3 4 5, and then you will get A, 3 waves down, 3 waves up, B, 5 waves down, C. But this time C will not cross A. Now see the difference. In flat, B will not cross A, and C will almost C will be almost at the level of A, slightly above, slightly below can happen, right? So this is flat, right? Same here. So these levels are almost same, and these levels of A and C are almost same. This we call as the regular flat. In expanded flat, B will go beyond the start of A, and C will go beyond the end of A. So very clear difference between these two. In running flat, so this is running flat. In running flat, B will go beyond the start of A, and C will fall truncated. It will not be able to go beyond the end of A. So again, very clear difference. So these are the 3 variations in flat: regular flat, expanded flat, running flat. And we have here simple zigzag, right? So these are the 2 types of variations that I have already explained you. And there is one more that I explained, and that was A, B, C, D, E, right? That's called triangle. that is not that pattern trading, but it's called triangular pattern. We don't trade it based on the the pattern trading, but you should understand that even in Elliott wave there is something that is called triangle, and that triangle appears something like this. So you will have A, B, C, D, and E, right? So A, B, C, D, and E, right? And why we call it triangle? Because if you will join the lows A and C and B and D, you will see this triangular pattern, right? So this is what we call as A, B, C, D, E pattern. So these are the patterns. Let's just name this also. I'm saying it triangle, or we can simply call it A, B, C, D, E, right? So this is triangle. Now these are the patterns that are happening, I would say 80% of the time. This is what you will see 80% of the time. Rarely you will see these double three or triple three or double zigzag, and trust me, we don't have to go into even the details of these structures also, because we are not trading the corrective patterns, we are trading the impulses. So what I do most of the time is this, and you will see me doing this all the time in bull market. The benefit of Elliott wave is that when the market direction is upward or downward, you know that there is a wave remaining, and that's what we trade. So for example, you see this 1, 2, 3, 4, and 5, right? So this is something that is an impulses. So let's say you see this, you open a chart and you see this, and you know we are in the bull market, the market direction is upward, and soon you will know that, you will see that the coins will never return. Now you are waiting for 3 to happen, and let's say 4 is happening. Now what do you know about Elliott wave? When we talk about Elliott wave, you know that 4 can never enter into territory of 1, and you also know there is one more remaining. That's the benefit of Elliott wave, and that's how you will see me trading most of the time in bull market. Right now I try to short most of the time because we are in the bear market, but in bull market you will see me doing this most of the time. You will see 3 has happened, you know that 4 cannot enter into territory of 1. So max or maximum it can go is this, right? And then we have this impulse remaining. This is the benefit of Elliott wave. So what you will see me doing is, most of the time in bull market, I will take this Fibonacci for wave 3, and I will start putting in from 0.382 Fibonacci level. So this will be my first entry. You will see me taking second entry here without caring what is happening. And this, if it comes down, it never comes down most of the time in bull market. It goes back from 0.382 because retracements are very small, very short in bull market, and very quick. And let's say this will be the third. If I fail to catch the third and it returns from there, I will put my third here, because I know that there is an impulse, and in bull markets the fifth is mostly like this. So this is benefit of Elliott wave, that you know that there is a wave remaining. And what else is the benefit? That you know that this is the end, there is no more wave remaining. So long and short in both ways, right? So if you know about Elliott wave, you will not be putting your investment here, because you know at some level we are going to get a huge drop. So this is risky, so that's why you don't enter. So now what I am talking about is that because in bull markets market direction is up, or in bear markets market direction is down, most of the time I don't care what is happening here. It's ABC, ABCDE, WXYZ, triangle, running flat, regular flat, expanded flat. I normally don't care, and you will not care also, because we are not trading these structures. We will know that there is a wave remaining. We will see a reasonable retracement and put in our first entry, put in our second entry, put in our third entry, and we are used to take very low leverages, right? So this will not be 100% drop, of course. It will be a 5%, 10%, 15, 30%, depending on how volatile and how bullish that coin is. But we'll make sure that before it returns, we at least have one entry in, and ideally 2 entries. And when it breaks the top, these will be so quick and so huge movements. I can tell you, let the bull market arrive and you will see in 1 minute candles 20, 30, 40, 50 and 100% moves. In 1 minute candle, you will see those candles, and I have seen those candles, and you will very quickly get in and out of the market because the overall direction will be up. And in bull markets, markets don't go choppy like we are going down in bear markets. Bull markets will go like this, like this, like this, and straight movements, very quick movements. Now let me show you what I am talking about. I can take any coin. My favorite remained in bull market AXS all the time, right? So let's go down to weekly chart, and we see this part. So let's cut it right in the middle here, and let's talk about this bull market, right? So this is what I'm talking about. So you see 1 2 3 4 5. Now this is what I was talking about. Although it's a higher time frame, we will go down to lower time frames also, but let's talk about this. This is what I was talking about. Now this is happening, you know, there is another one, right? There is one remaining. That's the benefit of Elliott wave. Now what I said, let me show you that. Okay, so I take Fibonacci and let's mark highs and lows. So what I said just a few minutes ago, I said my first entry in bull market always goes at 0.382 fib. My second entry always goes at 0.5 fib, right? So there you will have two entries. Like I said, one entry, ideally two entries before it returns. And bull markets never give you time to return. You won't see the signs of reversal. You will see this pin bar and a huge candle after that, right? So this is what I'm talking about bull market. So these are 100, 200, 300% moves, very quick moves. Now even if we go down to lower time frame, so you see I don't know what this structure is. It's ABC, it's ABCDE, it's running flat, regular flat, whatever this is, I don't know. Why? Because I know there is a wave remaining. And why I am investing in, where I am investing, 0.382 first, 0.5 second, and even if this would have come down, you will take your second and third entry. And you know that golden ratios are, or golden pockets are the areas that coins never come down from this area in bull markets, right? So if you go even to lower time frames, let's say to daily chart, there will be more, right? So you will have opportunities. We talked about that weekly chart, but let's talk about this daily chart, right? So what you see here, you see 1 2 3 4, right? So you see here that 1 2 3 4. Now let's say this 4 is happening. So you know there is one more remaining because it's bull market. The direction is upward. So there is no way that will be 3 waves move. It will be 5 waves move because the direction is up. So what you do, you take your fib, you take your first entry 0.382, second entry 0.5, you did not get your third entry and it moved, right? So at least one entry at 0.382, preferably or ideally a second entry at 0.5, but who knows, it will never come down to 0.5, right? And it starts going back from there. So this is beauty of bull market. And even on 15 minutes chart, 1 hour chart, same is happening. So let's go down to 1 hour chart, right? So where we were, let's just check that. So this was the area, right? So we said this is 3, this is 4. So let's go down to 1 hour chart. Or on every structure, you know that there is something. There is a wave remaining, right? So 1 2 3 4, do you know there is a wave remaining? So you come here and you say 1 2 3 4 5. Now you calculate overall, you say 1 2 1 2 3 4 5 1 2 3 4 5. So this is 1 2, right? And this goes on and on.